When we interviewed Rick Rule about this very topic about increased volatility, it's echoed by Gregory Mannarino, who talks about increased volatility. Michael Pinto talks about increased volatility. Alistair talks about it. These increased swings back and forth are, they say, symptomatic of when there is illiquidity in a system, when there's no effective liquidity. That's what you talked about before. There can be trillions of nominal dollars sloshing around, but it's not effective liquidity. And the other thing is that it's based on the fact that these are derivatives. In fact, this is not real money, and therefore trying to build a house on sand is not like building it on stone or gold. The back to the market analogy you're making between the electric market in Europe, which is blowing up, versus what could happen to the metals markets, gold and silver. What do we learn from what happened in the spring of this year when the COMEX nickel market actually did stop functioning and they had to cancel trades and roll back things because it simply was blowing up?
Oh, well, nickel is a small little piece of this. And what we saw on the day that nickel blew up, all commodities were affected. Gold was affected too. I think gold topped around then, something like maybe 2070, and since then it's been going down. So like look what they did. If you expect to have anything useful from a position in GLD or SLV or even PSLV, or PHYS, which is Sprott's physical gold and silver. And I'm not saying anything bad about it. I love Eric Sprott. Like, he's a really good guy, and his products are fairly good for ETFs. I'm not saying anything bad about Sprott, but those are derivatives too, because when the LME, when the London Metal Exchange actually reversed trades, that's basic contract law being broken, and that's really a statement saying there is no private property in this anymore. We manage it all, and we're going to tell you who gets what. There's nothing you can do. This is all a game that we control, and if it gets out of hand, we're going to take everything. That's what they've showed that they're going to do in nickel. They're going to actually reverse trade, steal billions of dollars from people who were correct, and give billions of dollars back to the people who are wrong. So basically, if you have a position in GLD or SLV or a position in gold futures and gold blows up, the exchange, whoever manages it, the CME, the LME, the LBMA, whatever, they're going to take everything from you. They're not going to let you get your physical from your derivatives position. And even if Eric Sprott wanted to, let's say he's an honest man, I know he's an honest man, and even if he wanted to give his physical silver to anyone who had his PSLV certificates or his PHYS certificates, he might not be able to do that because sovereigns might stop him out of desperation. Don't know. So you need to have a physical supply stored somewhere, because what we saw in nickel means they will reverse all of your paper gains and take everything from you, and you will not see anything from it.
Now, that's a natural lead into the human impact of this. Could we start with the human impact of the blowing up electric and energy market, the natural gas markets and so on in Europe as we're heading out of summer into fall and heading towards winter? What do you foresee as the potential humanitarian impacts of these vital commodity markets blowing up?
Well, first of all, let's clarify one thing. If the electricity market blows up, let's say that somebody in Europe has some sense and decides, okay, I'm just going to let all of these companies go bankrupt, and all the exchanges fall and everything just flatten, and we start over. I think that would be fine. They should do it now before it gets really cold, because once that happens, that theoretically, if that would happen, it would take a few weeks, maybe a month or two, to figure out who the new owners of the electricity infrastructure are, the people on the other side of the trades, right? It's not like a bankruptcy it's not like these power plants are going to blow up if the derivatives market blows up. I mean, all the stuff is still there. Everything is still there. There's no alien invasion. There's no nuclear bomb that went off. There's no Chernobyl. Everything's fine. You just have new owners. And then things shut down for a while, and then you figure it out. and you move the papers around and you start production again at a new price, whatever it is. I don't know exactly how it would work, but it would take some time and everything would be fine. There'd be no humanitarian disaster. The humanitarian disaster is going to be because they insist that this pyramid cannot fall, and they keep bailing out the current owners with more inflation and more printing. However they're going to do it, however they structure it, I have no idea. Everything's so convoluted now, I can't even say how they would do it. But that would be the humanitarian disaster, destroying the currency for the sake of bailing out the hedgers that have failed. That's the humanitarian disaster, because then everyone's money dies and they can't afford anything. They can't afford food because somebody wanted to bail out some power company. That's the problem.